Welcome back. Let's welcome Dipan Mehta of Elixir Equities on the show right now. 102 points is what the GIFT Nifty is indicating as an implied move. Dipan, yesterday we got the news from the DGTR where there are some safeguard duties coming in on flat steel products. Now, whether that does a lot or not is still, out in the open. Analysts expect about 10% increase in EBITDA, etc. But from the decline that we've seen from the highs in the metal prices and the anticipated up move ahead of this news, do you think, the worst is behind for metals and we start looking at this sector?
Yeah, good morning, Mangala man. Thank you for having me on your show. I'm sure it'll give a nice bounce to steel stocks. But end of the day, I think, do you want to invest in an industry which requires government help for protection? So that's the question which I'm not able to answer correctly. And, it's a very cyclical industry, a lot of volatility in earnings as well. And when markets are recovering the way they are, and with so many new choices coming up, I think it's better to go for other sectors, maybe other investment themes, rather than steel stocks. But there's no denying that they could be in for a nice trading bounce. Valuations are attractive and improved capacity utilization and volumes also could drive earnings. And then the base effect benefit also may come into play. So you could have a good run for steel stocks, but as a new investor in this sector, I'm not sure it's a good idea.
As a new investor, not a great idea. We're not sure whether it's a great idea. Dipan, stocks are seeing some repair and recovery, and that's good to see, right? You've been gasping for breath, and there's some air in the room. We all are. What's your sense, Dipan? I've been saying for at least a week, price-wise, bottom seems to be in. And momentum, how long it'll last, whether it's fleeting, etc., we'll see. But what is your own perspective, and where is interest activity likely to be if we've seen the lows already from here?
Yeah, Prashant, good morning. First of all, for us to completely conclude and have the comfort that we have a strong bottom in place, you need to see a trend reversal. We are seeing lower lows and lower highs. We need to see higher highs and higher lows. So once that pattern gets established, then you can be sure that, okay, now the worst is over and gradually the markets will build on the gains and we have a foundation in place. So that's one important pattern that you need to look out for. Secondly, I think that it has to be India growth stocks, and it could be the same stocks which did well in the last phase of the bull market, which started from October 23 to September 24. But broadly, it has to be India-focused companies and maybe beaten down sectors, which is why I came to cement, to an extent retail and banks and BFCs, because I feel that there's some value over there and growth rates will pick up, base effect will benefit them, and RBI cutting interest rates, government budget benefits of a rebate, all of these will definitely improve consumption. So the investment themes will be again India-focused companies. But as I said, I think for us to be completely sure, we need to have a reversal of the pattern which we saw in this last 5-6 months or so.
Okay. Dipan, in terms of stock action, yesterday the momentum was back in such a big way. Everybody's lapping up PSU stocks again, defense stocks again. Even the railway names were tracking big gains yesterday. Now, that could just be because they've been beaten down, right? 3-4 months of absolute thrashing. But what would your advice be? Should one be looking at areas like railway or defense at all?
Good morning, Surabhi. I think this is the effect of a risk-on trade from domestic investors. And these companies have created huge wealth. They've been multi-baggers past 4 or 5 years until about 6-7 months ago or so. There's been a steep correction. But if you notice over the last 2-3 years also, fundamentals have only improved. And they're sitting on decent order book position. There's good order visibility. And whatever government policies, encouragement is there, that continues. So I think that investors want stability in earnings and they're buying these companies. And I completely agree with that strategy. Quite positive on defense companies, on PSU, capital goods companies, on railway companies as well. You can pick and choose, but I think companies like HAL, Bharat Electronics, Bharat Dynamics, I think they are the best placed in terms of size, in terms of business model, and in terms of the kind of potential which they have in the domestic and the export market.
You started on by saying that, steel offers an attractive trading opportunity, but from a Vedanta standpoint, where do you see, value being generated? The management has been speaking about debt reduction. There is that demerger that will take place as well, which they've been speaking about as a big value accretive measure. Would you buy into that?
Yeah, Mangam, I think so. And there's a good, I think, value unlocking opportunity, or call it an arbitrage opportunity. So if Vedanta's current market capitalization is 1,80,000 crores or thereabout, when they split the company and all the companies have identical shareholding pattern, that could be a value unlocking scheme. And you could easily have a 10-15% type of appreciation of the combined entities when they get listed separately, as compared to the consolidated entity which is listed just now. So yes, I think there is a good trading opportunity. There's a good arbitrage opportunity in Vedanta also. And by the way, it was an excellent interview. And I think a lot of facts came out very clearly. So with the management sounding so positive, you could certainly consider this stock.
All right, 460 as far as the price is concerned. And yes, I mean, especially on aluminum, which is the prime driver for Vedanta. I mean, Mr. Agarwal actually sounding very, very confident.
Dipan, I want to talk to you about the best performing stocks on the Nifty so far this year, 2025. And it's the Bajaj twins, both finance and FinServ, right? There's so much of news flow happening, plus there's overall interest, and the consensus buy call in the market right now seems to be blue chip financials. What is your take on both the group companies and, of course, this latest buyout of Allianz?
So we first a disclosure that Bajaj Finance is our core holding, top holding, in fact. And for 5 years, patiently, we have been waiting and the stock has really gone nowhere. The Nifty and all the other small mid-cap stocks have been multi-baggers, but Bajaj Finance has been flat, almost flat. And now it has shown amazing strength. I think when the Nifty was down 13-14%, Bajaj Finance was up 15% or so. And I think that in the next leg of the bull market, Bajaj Finance could clearly be the absolute sector leader, and even amongst the Nifty stocks, the Nifty leader. So very positive on Bajaj Finance. I think a lot of concerns are getting gradually addressed. There was this threat from Jio, but that is no longer as severe as we thought earlier. And the NPAs and the collection efficiencies have all gone up. And the advantage of being multi-product certainly benefits Bajaj Finance, and its size is also quite important. So very, very, very positive on Bajaj Finance, and may not be a multi-bagger from these levels, but certainly could outperform the benchmark indices.
Dipan, another pack which did very well. I'm not sure if there was no news flow per se. Mazga, the shipbuilders, Mazga was up 10, Garden Reach, Cochin, all double-digit gains yesterday. Always moves like a pack. And of course, the other defense, the HAL of the world, did not really move. Any interest here and any picks?
Yeah, I think these are also all great companies, and all these shipbuilders have many, many years of earning visibility because of the kind of order book position they are sitting on, anywhere from 5 years to 10, 12 years or so. So very positive on the sector as a whole. And I think there is some incentive given for shipbuilding in some of the tweaks they have done to the Bharat Mala policy by the government. So there is some positive news flow. I just need to analyze it a little better and see the impact. But nonetheless, I think there's a huge export market for these shipbuilders. There's also the repairs and maintenance component or the division that has also got good potential for growth. And all the valuations are on the fair side. I would still see that these stocks can at least perform in line with the Sensex Nifty. And as a shareholder, I would like to remain invested.
Okay, now this is a slightly off-tangent question, Dipan. How do the completely bombed out names, anything just because of price damage, sheer price damage, do you feel chance le lete hain? Any names there in that chance le lete list? Yesterday, for example, you had Idea Forge, Fusion Microfinance.
The one stock, Prashant, which I'm thinking of day in and day out, and I'm resisting from buying as a matter of disclosure, is IndusInd Bank. And I rarely average, but I'm really considering over here. I'm very tempted. But then when I look what happened to RBL and Yes Bank, I'm just like holding myself back. But I don't think IndusInd Bank is in that category at all. But it's completely bombed out. It's extremely attractive. It's a great bank. And now entire banking sector also is looking up per se. And I think that this stock has been a bit too much beaten down. Whatever the damage was, it's a one-quarter phenomenon. I mean, they'll write it off in 1 quarter itself. But beyond that, I think, you could see improvements in earnings. The only thing which bothers me is the confidence of the management to, again, grow the loan book. Because what I have seen is that after you have so much of stress and so much of negative surprises, the management becomes very conservative and they don't go ahead and lend, and suddenly the market shares start to come down when it comes on the lending side. So that's one concern. But it's one bombed out stock that investors can consider. And if you have a kind of a strategy to go for such stocks, then why not have a look at it?
That's an interesting one that's coming.
Dipan reminds me of that line from the very famous OTT series, risk hai to isk hai. All of that. But he's still thinking about it. And that's the caveat that he's put out
The
there.
caveat is that risk. So we will just keep an eye out on that one. From one